What's up, guys? Welcome back to This Just In. Thank you for joining me today. In this video, we're going to take a quick look at Fisker, that is FSR. This is an EV stock that is very popular right now, got a lot of hype around it, so I wanted to give you my thoughts and where I see it going, so let's jump right in. All right, guys, before we get started today, subscribe to the channel for me. Hit that little bell so you get notified every time I post. There's also a link down in the description to my Patreon account. Come over and join the family. I've got a couple spots left for the Day One Squad. That's where I did it for just $1. You'll get access to the private Discord where we talk stocks. I've got 5 portfolios over there, so you can see exactly what I invest into. Anytime I buy or sell a stock, or I enter a swing trade, or I've got a watch list, I send that out as well. So if that's something you're interested in, if you want to be a part of the community in the Day One Squad, come over and join us. We would love to have you. Also, real quick to my current patrons, I love you guys. Current subscribers, I love you guys too. The channel's been growing super quickly, and I really appreciate it. You have no idea how much your support means. But guys, let's jump in. So for those of you that are not new around here and you've watched the channel before, you guys know that EV, green energy, are stocks that we like to invest into. I like to do a combination of some value investing with some, some growth investing. Guys, I'm 28 years old. I am totally fine in, investing in risk. I'm not just strictly value. I enjoy, investing in higher multiple companies. But so I own a few. I own XPeng, I own NIO, I own Lightning eMotors. We own them. Now, I did want to give you my thoughts on Fisker because I have looked at it in the past, but I've never given a video on it or anything like that. This company is it's a startup EV company. Their main goal or focus is to be more of a digital company where they do everything through an app, so no like physical dealerships. They've also got a kind of an asset light model where they outsource all the manufacturing. So we'll jump in and we'll take a look. They have not yet produced a car though. So this is a similar type deal as like a CCIV. They're both going to have, differentiating factors. Some will have pros and cons between the two. I used to own CCIV, ended up, taking my profit and getting rid of it. I got in at about 16 and I sold at about 28. So, but let's jump in, guys. So what we'll do is this is their website. We'll take a quick look at the website, go through a couple of things, and then I will show you some slides out of the investor presentation. We'll look at the chart and we'll wrap it up. So guys, the CEO, Henrik Fisker, he's not new to the industry. I mean, this guy made the Fisker Karma. He's been making and designing luxury vehicles for years and years and years and years. However, though, this is a new startup EV, company. This is not a old, EV company by any means. They are based in California. Their main thing, like I was saying, is the first digital car company where they do everything through a mobile app. So they do all of the servicing. You can literally, get financed and buy, right there. You can do leasing through the app. You can do a lot of stuff through the app. Which is fantastic. I think a lot of people nowadays are almost expecting to do things through an app versus, having to go down to the dealership. Like I said, it also helps them create a more asset light, model where they can keep their costs down initially because they outsource the manufacturing. They partner with different companies to do the service. So, that is a good pro on that aspect. Now, they do not have a vehicle on the road. They have never sold a vehicle ever. And they have quite the valuation, around $3 billion. Now, with that being said, they are planned and they are on track to start production, or excuse me, deliveries at the end of 2022. So Q4 2022 is when the first deliveries are expected to go out. Their big thing, guys, is like super sustainable, like green, renewable, a lot of recycled materials on their vehicle. Their price point starts at $37,499, and I think it goes all the way up to like 60 something. The car's actually a pretty nice looking car. It looks kind of like a smaller Range Rover, to be honest. Now they're starting with the one vehicle, with the Fisker Ocean. That's this one right here. Now I like the fact that they're starting with the SUV, because the SUV is the more sought after model or body style of cars in the United States. People want to be a little bit higher up off the ground. They want the more space. So I do like the fact that they're going after the SUV market. This is their app right here. The other thing that they're doing is the really loose lease terms. They're trying to create demand. They're trying to do this lease, plan where they're giving them 30,000 miles a year versus the 15,000 that most traditional leases provide or give you. I think it starts at 10, 12, and 15. They're doing no terms. Most leases are like 36 months, 24 months or whatever. Theirs is none. Look, as you can see here, come as you are, go as you please. Our Fisker Flexi lease moves with you, doing away with long-term commitments. We remove the stress of restrictive limits with 30,000 mile annual driving allowances. You are free to take the Ocean where you please and return it when you please. Zero penalties. No, that's not a typo. Zero zip zilch. That's great, guys. Like, I mean, that's great for the consumer, but that kind of makes me a little nervous, from the business standpoint, because not only are they, they're doing really low fees to drive off the lot, like $3,000 or $2,200 to drive off the lot, but they're not doing any type of lease terms, and they're doing 30,000 miles a year. So, you get somebody out there, they go drive it, 30,000 miles in the first year, which is more than the average per year. Then they just come and drop it off and say, all right, peace. I don't know. We'll have to see how that works. I would imagine that lease terms are typically there for a reason, to make sure the business is remaining profitable and they're generating income off that. But who knows? That could be a super big thing for them. They could do very well with it. I'm just not quite sure how I feel about it yet. I feel like it would be a similar type thing as the 2008 financial crisis with houses. I mean, they just leasing to everybody they possibly can. Who cares who it is? And, that could put them in a bad spot. People are, not paying their payments. They can cancel at any time. Who knows, though? Again, who knows? I do see it being as a potential good thing to create more demand, just going out there and leasing as many as they can because of the super flexible terms. We'll just have to see. Now, I wanted to show you a couple of the unique features, or kind of what separates them, because guys, the way I see it is they're not going to be a big mainstream, automotive company. They're not going to be like a Ford or a Volkswagen or a Toyota or a Tesla, from my opinion. That's my opinion. Because of the nature of the business. I mean, that doesn't necessarily mean that they can't do well, but I just don't see them being a really big mainstream company. The other thing is, they're not producing the car. They're not delivering until Q4 of 2022. I feel like that's not super long away, but I mean, that gives a lot of opportunity for competitors to jump right in and release a very similar type model. And it's not like the price point is super low either. I mean, 37,000 starting all the way up to around 60 grand. I mean, guys, if the people that are, are able to spend 55 or whatever on a car, they've got a lot of options. And so, the Tesla Model 3 down there at the $30,000 price point, or the really high-end Tesla, I think that really lower price point, kind of limits your options. You don't have as many nice vehicles in that price point, that you can afford, that's electric and all those other options. So, but at the $55,000 price point, you do have a lot more options. So, but a couple of things here. This is one thing that I liked that stuck out to me, was targeting world's most sustainable vehicle. They used recycled rubber from tire manufacturing waste, eco suede interior trim from recycled polyester. The interiors are all vegan. Now this right here is great. Carpets made from fishing nets and bottles recycled from the ocean's waste. that's a huge branding thing, guys. If they can really drive home that, the world's most sustainable vehicle, I do think that that will help them overall with growing brand awareness and getting out there in front of more people. But as far as a lot of differentiating factors, their range is like 300 miles, 250 to 350 miles, which is pretty industry standard. The 0 to 60 is like 4 seconds. They've got the solar on the sunroof, which is great. I just don't see there being a ton of differentiating factors that's really separating them from the competition. But, we'll just have to see. You can see here the solar sunroof. This California mode's pretty cool. They've got 9 glass panels that open, so it pulls all your windows down. This right here is the other thing that was pretty cool, is a large curved screen with haptic buttons, a head-up display with connected karaoke mode. So they've got a full color, head-up display and a big curved screen. So, I also read that they are, they're really focusing on like a cloud connected electrical architecture in the vehicle that will use machine learning. So it'll use AI to analyze the vehicle's overall performance and kind of do predictive maintenance to keep up on the vehicle, let the the owner know if there's issues. The other thing is it helps optimize the battery and performance to make it get a longer range. They have like third-party integrations and stuff like that. And the solar panel on the roof will help kind of, optimize the battery or, make it run a little bit more efficiently. So again, those are some things that really, I think, can help set them apart, but I don't see a massive differentiating factor here. The vehicle looks nice. Yes. It's super sustainable. Yes. The fact that you can do everything through the app. Yes. That's a good positive thing. But other than that, guys, the range is pretty straight. The price point is not super competitive to a sense. But overall, it's a nice car. The Ocean's, the paid reservation growth rate substantially higher since mid-October. I want to say that as of March 2021, their paid reservations was up like 400% from a trailing 30-day standpoint. But as you can see here, since February 2019, they launched the app in November. Really just, growing pretty substantially when it comes to paid reservations, up to about 12,400. That's not a lot, guys, but 13,000 vehicles, not too bad. That's as of February 24th, 2021, so it might be up a little bit since then. Every time they do a little bit of an event or announce something, looks like they get a nice little spike. Guys, there's quite a bit of time until the vehicles start getting delivered, so they could really raise, get a lot more reservations up until then. I do see this as being much more of a niche vehicle. You've got to be pretty familiar with the brand. You've got to be, pretty aware of some of their features. I don't see a standardized person that has never heard of this company going out and buying this car. I do see this as somebody that has more of an idea of the fundamental brand and who the company is. Just because, guys, with cars, especially electric vehicles, where they are a newer type concept, not really, but newer type concept, when you start getting like an older demographic, people up in their 40s and 50s, I just feel like they're going to feel more comfortable going with a very well-known mainstream brand, where younger people as myself would have no problem going with a Fisker or one of these newer companies like a Lucid car. But that's just all personal opinion, guys. I have no idea, but that's some of my concerns. Now, I did see this, which was pretty, this is actually a really good thing here. So they have an agreement with a vehicle producer named Foxconn. As you can see here, Fisker and Foxconn will jointly develop a vehicle under the Fisker brand that will be sold in North America, Europe, China, and India. According to a statement, Project Pear is what they're calling it, will enter the market with a starting price of less than $30,000 before incentives. The two companies expect to start production on the vehicle in Q4 of 2023. Manufacturing will begin in the U.S., with several locations being considered by Fisker and Foxconn. Guys, that's big. See that? Now that is something that I can get excited about, because if they are looking to, be different or set themselves apart or really, find a target market or a strategy coming in at under $30,000, but yet still producing a very nice car that's got a lot of technology in it that looks really good, that's something that I can get excited about. Because at that lower price point, there's not very many options for a nice electric vehicle at this moment or at this point in time. Now, up until, 2023 Q4, end of 2023, that's a lot of time there. I mean, there's a lot of companies that could come out with a car that's under $30,000 that just has a ton of really cool stuff in it, up until that point. So we'll just have to wait and see. Now, if this was like they were starting production on this, 2022 mid, that would be really exciting, but unfortunately it's not. So now the last thing I wanted to show you guys is I'm having an issue with some of the financial projections. This is a very similar thing to CCIV. I've talked about it a few times. I've really kind of tried to bite my tongue and not say anything because I know how much hype's around CCIV and I didn't want to get crucified. But very similar, guys. They have never sold a vehicle. They are doing the outsourced manufacturing where they aren't, having to try to figure it out on their own. So they're by outsourcing the manufacturing, they are kind of going around like the learning curve and the growing pains of growing your own manufacturing facility. So I see that as a benefit. Now, the other thing that I see as a negative is when you do outsource manufacturing, you are solely relying on that company to produce the quality, produce the cars on time, not have any issues. So there's good and bad there with both of the companies, CCIV and these guys. CCIV, they're doing all of their own manufacturing. They're building their own plant. They've also got some real big projections of how many cars they can produce. But look at what's happened with them. They've got delayed and delayed and delayed, and still haven't produced a car. That could still happen with these guys, even though they're outsourcing, but hopefully it doesn't. And that mitigates the risk of that happening because they're outsourcing the manufacturing. But I wanted to show you a couple of things here. Now, this investor presentation is way old. This came out like in June of 2020 or something like that. But I wanted to show you this. So they're predicting, so this is units produced, okay? Let's see here, 2024. Now, this is in thousands. So they're predicting to have 8,000 units in 2022. That's not very many. But they're looking to do 51,000 vehicles in 2023, 175,000 vehicles in 2024, and 225,000 vehicles in 2025. Now, look at this revenue guidance here. So 600 million to 3.3 billion. The first year that they're doing full production, they're projecting for 3.3 billion when they first release this. In 2024, 10.6 billion. 2025, 13.2 billion. Okay, guys, then we don't even need to look at the EBITDA and free cash flow. Now, since then, the estimates or revisions, projections have been revised. So as of now, they're looking to do 425 million instead of the 600 million in 2022. Instead of the 3.2 billion, 2.3 billion. So an entire $1 billion was taken off their projections in the last few months. I mean, back here in, the end of 2020, they were at $3.3 billion projected for 2023. Guys, at an average price of $55,000, that's 40,000 vehicles to be produced in the first year that they start delivering cars. I'm not saying it's impossible, but what I am saying is that is some huge guidance there. And like I've said in other videos, if they do not hit those guidance, they will get crushed. Now, the last 6 months or the last 3 months, the stock price ran way up and has came straight down since then. I wanted nothing to do with it when it was up there around $20 to $30. Since then, and the fact that it's came down does make it a little bit more appealing. And I do want to kind of show you, let's take a look at the chart. So I did some research and I was looking at price to sales ratios over the course of a lot of the EV startup companies out there. I was seeing them anywhere as high as 20 times price to sales down to, 2 times price to sales, 8 times price to sales. We're just going to use 2 as a standardized metric. Based off 2022 revenue, they're about right in line with the 2 times price to sales ratio. Based on 2023 revenue at the 2.3 billion, 2 times price to sales would put it at about $28 price target as of right now. I want to show you guys the chart here. This is a very ugly looking chart, guys. I mean, look how much red there is compared to green. If you look here, like I said, came out, ran all the way up to a high of $21, sold off, back down here around the $12 range, tried to make it back up, came down, went back up and reached a high of 23 back in November, and then skyrocketed all the way up to $31.76 at the beginning of March 2021. So that is something I'm pretty sure they announced that deal with, or the Pear project. That's why that did that. A lot of the other stocks really started trading off beginning of February, middle of February. So while all the other stocks were trading off in February, this stock was moving up. Look at these big gaps here. One thing I wanted to show you though, guys, is look how this 20-day moving average right here has acted as like a brick wall every time it's tried to push back up through it. And so, this is right here, this set sharp decline has brought the overall valuation down to a level that makes it a little bit more reasonable and a lot more attractive. Like I said, up here at the $25 range, I wanted nothing to do with it. Now, I do not own this stock, and I probably will not own this stock as of right now. This is a company that I would rather let them get there and start producing vehicles and prove that they can get vehicles out on the road and people like them. And very similar to CCIV, guys. If they were projecting to do 10,000 cars, 20,000 cars the first year, I would be a lot more comfortable. Now, guys, this is just my opinion. I know a lot of people probably love this stock and they will argue with me and fight me on it all day long. That's fine. Same thing with CCIV, guys. I just didn't think that their rollout model made sense to me. I didn't think that starting with that super expensive vehicle made sense to me. It was very different than when Tesla did it 10 years ago. So overall, guys, I like the vehicle. I think it's a nice looking vehicle. I like that they're trying to be very sustainable and eco-friendly. I like the asset light model. I like the digital and the app. Overall, I like the guy that designed it. The Fisker Karma was a cool car a few years back. Obviously, that didn't end up working out, but nonetheless. So up here, I didn't like it. Down here, it's not too bad. If you can see here, I mean, you've got another support area down here around like 879. I think your major support level is like $9.40 or $9.60, somewhere around right there. So as you can see, I mean, it has kind of jumped up a little bit. It gapped clear up and then came back down and is sitting at the $10.50 range. I think you are seeing some seller exhaustion down here as well. So you can see right here, on the MACD histogram, you are starting to get some seller exhaustion. So you could see some signs of the sellers weakening. You could see the stock start to, try to make its way back up. But in reality, you really want to see it break through that 20-day moving average or exponential moving average and get up on top of it and start making a higher high. Because as you can see before, it's got rejected at it multiple times and it just couldn't get through it. As you can see in these other instances, when it has got above it, it went up nicely, sitting there getting rejected, gapped over it, boom, straight up. So I would wait, if you don't have a position in it now, I would wait for clear confirmation that it's going back up, it gets through that moving average and starts making higher highs. Over here down at the $10 range, you have mitigated your risk exponentially from, the $25 range. Guys, that guidance is huge. If they do not execute on that 2.3 billion in 2023, there's going to be a lot of downward pressure. If they do, though, this stock could do multiples of where it's at today. Again, I don't own it. I'm probably not going to own it for the time being. I think the company has a lot of potential moving forward, but it's just a little bit too risk on for me when I could go and invest in a company like XPeng that's already, you know, producing a lot of vehicles. Their deliveries are going up. They're, you know, appealing to a lower price point, you know, type consumer. They're breaking the you know, autonomous driving record. If you think about it, guys, I mean, XPeng did like 27,000 vehicles in 2020. These guys are trying to do 40,000, over 40,000, the 50,000, something like that within the first year. So I'm not saying it's impossible. I'm not saying they won't do it. I'm just saying, for me, I would rather wait until they get there, and see what happens. So that's it for today, guys. You know, if you disagree with me, let me know down in the comments. I'd love to hear your opinion on it. Overall, the car's a nice looking car, just not for me today. Now, based off the 2 times price to sales ratio, you could see, you know, a $28 price target, you know, in 2023, if the company continues to execute on their plans, which is a lot of upside from here. You're also getting the seller exhaustion. You're getting a little bit of exaggerated divergence on the RSI, so you really could see the stock start to move back up. I think if you're going to trade the short-term volatility of it, that's one thing. If you're going to hold it and continue to accumulate a position, you know, I would wait to see if there's a little bit more downside in it and wait until you really get a confirmation that it's back up into an uptrend. You know, thank you guys. This video is for entertainment purposes only. I'm not a licensed stockbroker. Always do your own research and due diligence. Don't just take my word for it. Come over and join me at the Patreon. I'd love to have you be part of the family. And you guys have a good Sunday. I'll see you guys in the next one. Peace.